Good evening, everyone. Welcome to Tech Mahindra's Q3 FY'25 virtual press conference. Before we proceed, I'd like to inform you that there'll be a Q&A session at the end of this conference. Today, we have with us Tech Mahindra's CEO and Managing Director, Mohit Joshi, and Chief Financial Officer, Rohit Anand. Without any delay, over to you, Mohit.
Thank you, Abhilasha. Good evening, everybody. I hope your year is off to a good start. Thank you for joining us today to discuss the company's performance for the quarter ended December 2024. With the turn of the year, we hope that the new year will bring additional opportunities for all of us. It is not just the turn of the calendar year, though, but it's also the completion of a year since I took over as the CEO of Tech Mahindra. And as we reflect on the previous year, we're reminded of our commitment to delivering value to clients and to stakeholders, and more than 150,000 Tech Mighties that have rallied together to deliver that. So if you ask me, where are we on the journey? What is the ground that we've covered in 2024? And I was reminded of the words of Daniel Ek, the CEO of Spotify, who recently said, we are where we set out to be on the transformation journey, if not a little bit further. And that's the way I think about the steady path that we're making towards achieving our long-term goals. I think we're particularly focused on improving our growth capabilities and our revenue mix in order to meet our growth aspirations for FY'27. We are also making concerted efforts to improve our organization and to drive productivity gains and price optimization to achieve the 15% EBIT margin by FY'27. For Q3 FY'25, we report revenues of 1.567 billion, which translates to a constant currency growth of 1.3% on a year-to-year basis, and a constant currency of 1.2% for the sequential quarter. The steep currency movements through the quarter have impacted the reported numbers. Adjusted for fluctuations, we saw healthy revenue growth in communications, in BFSI, in healthcare and life sciences. In terms of regions, we see pockets of demand across our prioritized markets of North America, Europe, and APJ. I'm very proud to say that we report new deal wins of $745 million for Q3 FY'25, and this is in the back of several large and multi-tower deals in telecom and the manufacturing sectors. On an LTM basis, our deal wins have improved from about 2 billion in Q3 '24 to 2.4 billion in Q3 '25. Amongst the key deal wins, we won a global mandate for network transformation and for delivering network as a service to one of the world's largest chemical manufacturers. This project involved service delivery from our capability centers across various countries. And this deal will lead to a very innovative managed network as a service project, leveraging the power of NetOps.ai, our platform, and multi-country delivery capabilities. We have also onboarded a new logo in Europe, where we have been chosen by a large telco as a strategic partner for the consolidation and accelerated transformation of their digital IT and network ecosystem. TechM, as you know, has an unmatched depth of experience and IP in the telecom vertical. And while we are expanding in other verticals for a balanced revenue mix, we are committed to maintaining our leadership in the telecom vertical and to serving new and existing clients. TechM was also selected by one of the largest communications service providers in North America to provide frontline customer experience services and to help the clients achieve operational efficiencies. All of this while providing enhanced services for its customers by leveraging our BPS capabilities. Another large telecom operator in Europe has chosen TechM to simplify and modernize their network, IT, and service operations, including driving autonomous operations using GenAI. I think this deal is a tangible example of tailoring automation and GenAI solutions to vertical specific needs. We have been selected by a leading European automaker to support their core applications and infrastructure operations. And I think despite the challenges in the automotive sector, we see opportunities to serve our unique capabilities. In addition to the above, we have also seen healthy deal wins in the technology, media, and entertainment space, and encouraging progress in the BFSI and healthcare and life sciences verticals. While these new deal wins will help us scale our priority verticals, we have made sure to chase quality over quantity. We have onboarded 40 plus new clients from our must-have accounts so far in the current fiscal, of which 12 were onboarded in the December quarter itself. I'm really very proud to report that over 24 accounts from these must-have accounts now have a revenue run rate above $1 million annually. And we have won 6 large deals from the must-have accounts in the current year. I think this is a great example of the focus that we have on working with the largest corporations across the world. We will continue building a high quality and scalable client base that can contribute to our long-term growth. In this quarter, we have reported an EBIT margin of 10.2%, which is about a 60 basis points expansion from last quarter. And this is despite the steep currency headwinds and the ongoing investments that we're making. We attribute this gain to efficient delivery, to pricing excellence, and to cost optimization under Project Fortius. As we progress on our transformation journey that we have embarked on, we also have attracted the best talent from across the industry. Last quarter, we welcomed Sumit Kumar Popli as the head of technology, media, and entertainment, as Harshul transitioned to lead the European business. Sumit comes with a track record of success for over 2 decades in transforming international businesses across various industries. We also welcomed a senior industry leader as head of client delivery and operations in Europe, and another industry veteran as the global head of cloud consulting. We have onboarded 2 experienced CIOs in the US and Australia, respectively, to bolster our consulting practice in the telecom space. And this, again, is proof of our continued focus on telecom. We have expanded the leadership teams for our cybersecurity and for our risk management practice, our Salesforce practice, and our Microsoft applications practice. We've created a large deal solutioning team comprising of absolute superstar deal makers who will identify and oversee the complex multi-tower deals throughout the deal lifecycle. As we build a team of best-in-class talent, we have also invested in strengthening our partner ecosystem. We have forged several new partnerships to enhance our capabilities and to expand our service offerings. Very recently, we announced the establishment of a Center of Excellence powered by NVIDIA platforms to drive advancements in sovereign large language model frameworks, agentic AI, and physical AI. Based on TechM's optimized framework, the COE leverages the NVIDIA AI enterprise software platform to offer customized enterprise-grade AI applications to help clients adopt agentic AI in their businesses. The NVIDIA Omniverse platform to develop connected industry, AI digital twins, and physical AI applications across various sectors, including manufacturing, automotive, telecom, healthcare, banking and financial services, and insurance. TechM also entered into a partnership with ServiceNow. This is for the integration of the One E2E platform. And I believe that this will enable businesses to enhance operational efficiency and to enhance their competitiveness by integrating GenAI capabilities in critical processes and to modernize the infrastructure using TechM's global capabilities. We are seeing momentum in our ServiceNow practice bolstered by our investments in this ecosystem and by the client adoption of the ServiceNow platform, which in turn is partly driven by the huge interest in AI among our client base. We have also collaborated with Universal Scientific Industrial. USI is a global leader in electronic design and manufacturing and in SIP system and package technology. This is to establish the first engineering offshore development center in India to accelerate innovation in smart device engineering. I believe that this collaboration will provide scalable solutions, will accelerate time to market. It will deliver innovative advancements to drive the future of connected devices, to drive the future of additive manufacturing, connected vehicles, augmented reality, virtual reality. So it's a very significant investment in our manufacturing practice. We have signed a multi-year strategic collaboration agreement with Amazon Web Services, AWS, and this is to develop an autonomous network operations platform. This is built by TechM on AI and ML and Gen AI services powered by AWS. This platform enables customers to transition the network operations from an on-premise infrastructure to a real-time, proactive, and preventive model operating on a hybrid cloud. And this enhances the speed and efficiency by accelerating the implementation of network services on the one hand, and reducing the time required for infrastructure maintenance and repairs on the other. TechM's offerings in the hybrid cloud space can better enable clients to make foundational moves needed to achieve tangible returns from ML and from Gen AI. We recently announced the launch of TechM Agent X. This is a comprehensive suite of Gen AI-powered solutions designed to drive intelligent automation and to enhance efficiency for enterprises globally. Through these solutions, enterprises can automate complex business solutions, IT and data tasks, and the resultant improvement in productivity is often as high as 70%. I think a testament to our capability building efforts is the recognition that we've received from industry analysts. I'm really proud to announce the fact that we have improved our position in analyst ratings in the top 2 quadrants from 81% last year to 88% for the same period this year. Some notable recognitions recently are as follows. TechM has been positioned as a leader in multi-public cloud services 2024, consulting and transformation services. This is for the Nordics, mid-market UK, mid-market US by IST. We are positioned as a leader in advanced analytics and AI services 2024, data modernization services for the US by IST, and as a leader in the Everest Group Quality Engineering Services for AI applications and systems in their Peak Matrix Assessment 2024. In the third quarter, Tech Mahindra got encouraging accolades and recognition, including the following 3 that I just want to mention over here. Firstly, we were recognized for the best mobile banking app under the vendor category by the Digital Banker Global Retail Banking Innovation Awards in 2024. And the award really highlighted TechM's outstanding contributions to the digital transformation of the lending and the collections businesses in both the consumer and the commercial loan space. We have been ranked first in India and second globally in the Dow Jones Sustainability Indexes, the DJSI 2024. And before I pass it on to Rohit, I would just want to express my gratitude to our employees, all the TechMighties, to our clients, to our partners, and to the shareholders for their continued support and trust in our company. Together, our efforts are making progress, and together we will seize the opportunities that lie ahead. I now invite Rohit to take you through the details of the financial performance. Thank you.
Thank you, Mohit. Wish you a happy new year to everybody. Let me begin with an overview to the company's financial performance for the quarter. We ended the quarter with revenue of $1567 million, growth of 1.2% quarter over quarter, and 1.3% on year-on-year on a constant currency basis. Q3 was a quarter where we encountered major cross-currency headwinds, due to which it was a reported decline of 1.3% QOQ and 0.4% YOY. Translating this in rupee terms, our revenue was 13,286 crores, which was a decline on a reported basis of 0.2% QOQ and an increase of 1.3% CC, while a growth of 1.4% YOY. This quarter, the growth was led, as Mohit mentioned, by BFSI vertical at 2.7% in CC terms, followed by communication, which was up 0.4%. Manufacturing declined in the quarter by 2.5%, mainly due to the headwinds that we saw in the automotive industry, including print and freight. We reported EBIT dollar revenue of $159 million, or in rupee terms, 1,350 crores, which is a 4% increase over previous quarter and a result in EBIT margins at 10.2%, an expansion of 60 basis points. This is despite the cross-currency headwinds that we saw. The margin by operating leverage from savings contributed by Project Fortius and other efforts that are driven across the organization. Our other income in the Q3 was lower compared to the previous quarter, mainly due to the exceptional item of land sale gains in Q2 FY'25, which we articulated at $54 million. The effective tax rate for the quarter was 23.8%, and on a YTD basis, close to 26%. As we reported, the PAT for the quarter, 116 million, in INR terms, 983 crores. The PAT margin for the quarter was 7.4%. On a sequential basis, after adjusting the land sale proceeds in the previous quarter, the operating PAT grew by 9.9%, and the PAT margins grew by 80 basis points. We had a great free cash flow generated in the quarter at $199 million, which translated to 172% of PAT conversion. Cash and cash equivalents for the end of the quarter was at 799 million, or in rupee terms, 6,841 crores. DSO for the quarter saw a huge reduction at 88 days, which is a reduction of 6 days on a sequential basis and an improvement of 3 days on a YOY basis. While we expect some of this to normalize, I must reiterate, this is the lowest ever DSOs that we've seen, the huge testimony of the operating rigor that the team has delivered. The total hedge book stood at $2.1 billion versus 2.3 in the last quarter, based on the hedge accounting mark-to-market. Loss for the quarter was 4.7 million, while gain in the P&L was 0.7. The mark-to-market losses, which is residual 5.4 million, was taken to the balance sheet. The new deal TCV wins, as Mohit mentioned, was an increase from last quarter at 745 million. And the highlight was it was broad-based in our prioritized verticals and markets. While we continue to expand margins, we also continue to make investments for our long-term sustainable growth. Some of the areas of investment include Gen AI capabilities, which Mohit mentioned in terms of training, tools, partnerships. A recent example, which Mohit also mentioned in his speech, was the Agent X, a comprehensive suite of Gen AI-powered solutions designed to drive intelligent automation and enhance efficiency for enterprises. We continue to induct freshers to address long-term pyramid, scaling up, and learning and development platform for the entire organization. We are investing towards building service line capabilities and in modernization of tools and platforms for delivery excellence. This is in addition to the efforts that we take towards shifting our revenue mix through investments in our prioritized verticals and markets. So to summarize this quarter, we delivered growth in EBIT margins and operating PAT, both on sequential and Y-to-Y basis, resulting from our targeted actions under Project Fortius, along with steady increase in new deal wins. Our continued focus on optimizing working capital management has resulted in generation of robust free cash flow. With that, I will take a pause now and pass it on for Q&A. Thank you.
Thank you, Mohit and Rohit. We will now conclude the conference. For those of you who've joined us on our social media channels, thank you again, everybody, for joining.